All right, guys, welcome back. Welcome. I'm so happy to be back on the live. So I've been away for about 11 months because I've built a programming academy. I've had programming students for a long time, and I made the decision to turn it into an academy. So I have 11 different programming courses that I've been working on, including courses to do with mentorship for just me myself. Now I'm happy to be back. Okay. And grow this channel again and continue where we left off. But yeah, it's been good, man. Um, so if you're interested to know about the academy, it's called the Code Switch Academy. csacademy.io is the website. Okay, we run boot camps and help you get from being a nowhere near a software engineer to being a industry prepared engineer and out there with the help of getting you into employment. All right, now I'm still a trader. It's my skill, and I'm also a coder and a developer. As you know, I've got the trading algorithm that you guys have seen. But I'm still a live trader too. So without further ado, let's take a look at what the market's been doing and I'll share with you what I was telling my students today. So let's go from the first place, which is the weekly time frame. So let me get there over here. Now you've heard me talk a lot about the dollar index over the time I've been on YouTube. And one of the things I discussed was this order block right here. This order block is a special one. Reason being is because it's if you want to put it this way, the order block that is resisting the price from going past 106 cleanly, towards the 110s and 12s. Now, currently, and because I have markings here, it might look a bit weird, so I'll move it out of the way and redraw them again. When you look at the price, we had a very strong long here. When the price started to push short, you can see the length of this retracement. So the B2C aspect of this bullish trend was not as strong as the A to B. So we're still in the game for bullish activity. The price reached here again, and you can see that the short side became weaker when it returned into the same order block, which is letting me know that sooner or later, price is going to probably break past this area. It's just a matter of time now. We're getting towards November with the US elections, which is just in 3 months' time. So a lot can happen in those 3 months. Now, essentially for me, when we look at the price of what's going on here, we have this short that's happened and the price has taken this low. And if you zoom in, you can see that the price has actually done a weekly induction. So it's taken the low of the previous week. All right. We'll call that different names depending on what school of thought you're in. So let's go from here. So this low right here is important because it's taken this low. So it's taken the sell stop liquidity that will be rested beneath here and also any stop losses and then push back up again. So that they're completely wiped out most people there. Now, on the other side of the story, because the close of this candle didn't close beneath the low, the price is giving us a reversal candle here. And also, just to note, the price is still within this demand order block. So we're still inside of demand liquidity, which means the dollar index could very readily push up for a long. Of course, we have to wait and see, but this is just my hypothesis at the moment. Okay. Let me get rid of this Fibonacci. We don't even need it. Now, going on to the daily time frame, this is what I'm seeing and what I shared with my students today. So on the daily time frame here, let's take a look. The price gave us a low in this demand order block. And then we see the first time it didn't return to this order block. So we have unfulfilled deficiency, push low, done the same thing again, 3 times, 4 times, didn't return to this order block purposefully. When he actually returned here, we had an initial movement, and then the market just tanked right beneath this order block. Now, this movement here is what some people consider to be a dead cat bounce or a dead cat retracement. The price gave an initial long and then wasn't even able to reach back to this supply order block. It just kind of just shattered right through. Now, my concern is with where this red line is. On Thursday, the price gave us another reversal structure here inside of the area here, this demand order block here, and started to drop down short. Now you can see that on the bearish side of things, there's very strong bearish liquidity, and there's not as much strong buying liquidity here as the selling side. So with this movement here, this may actually trigger another sell again. Now, what I said to the students, which I'm telling you because you're my global students and I respect you the same, so I'll make sure I hide no secrets whatsoever. When the price did this movement here, my only concern is that it hasn't broken any significant market structure. Now, I know if you go down to like the 1 minute and 5 minute, there'll be a break of market structure, I'm sure. But my problem is that for a movement short to happen, we do need to see a clean market structure break. The demand order block that produced this liquidity, which is here, gave us the stop point. Price came back down here, or the induction, whichever way you want to call it. When it got back over here, it's started to go long again. And my thing is that if in a situation where the price is not giving us a market structure break, we may get a further long happening if the price doesn't give us a clear market structure break soon. Now, what do I mean by market structure break? Well, we need the previous swing low before the stop hunt happened to give us something, right? Sorry, that's just my alarm. Okay, but we haven't had anything of that sort. So right now the market is kind of like just hanging in a range. This is today's price action, by the way. This is Friday's price action. What we need is that this specific low, and I'm gonna just try and see if I can change the color here. So we get a trend line and drop it here. Let's change the color. All right, so it's okay. So right here, if the body of a candle on the H1, in my personal opinion, doesn't close beneath here, then we haven't broken structure here. The price could still actually take off for a long and continue if there's still liquidity enough to go for a long. All right. If we look at when we're going to look at the charts in a minute, I'm going to go back to MetaTrader, but at the moment, when you're looking at the charts, my only problem I'm having is that there's so many off correlation. So right now, with some of the US dollar pairs, they're actually going long, whilst something like gold is also going long. Now I was in gold long, and I'm kind of regretting that I closed it. The more I look at it, I should have just left it, but it is what it is. But what we want to do is try our best to, get ourselves into a position where we have good correlation with the dollar index. So let me just show you my charts to show you what I'm talking about. So I'm on MetaTrader right now, and you won't believe me, but I had a long from here and I closed it around about here. Should have just kept it open because you can see it's doing amazing stuff. I've also got pound USDs for a short because the price has given what we would call in the academy a type 1 D1 stop on. All right. We do have market structure break on the 15 minute, which is good for a move like this. There's a daily move. All I'm waiting for is the price to really return here. So my take profits are here, but I also have a long trade that I'm looking to potentially go for. But long story short, anyway, when I'm looking across the pairs now, at the moment, the dollar index isn't really showing too much signs of anything. But I'll just run you through the pairs I ran through them. I'll start off with gold. With gold, unfortunately, the price has taken off so much. I really did think that the price was going to stop there and not give us any more, like give us a reversal back. So I've got sell stops hanging around everywhere. I'll delete those for now. What I'm hoping is that that gold will give us an opportunity somehow to get in, but it looks as though that gold is just on a runaway path and it's not going to stop. So I'm gonna have to find another way to kind of get into the trade. But I'm happy I got something from it. That's the most important thing. I just wish I held it for longer. Now I had the setup here, I had the markings here. I just sometimes I guess with gold, in my experience of trading, when gold is giving you green and you see green in your account, sometimes it's good to just take it and try to re-enter. But I kind of got too hung up on the fact of a reversal, so I kind of took some L's. But I flipped my account anyway, which is great. But I wish I held on for longer. But with gold, we have two H4 order blocks here. We have one here. And if you can imagine, when the price did this movement, I actually really thought it was going to just drop back in a little bit and then give us a long, but it didn't. Now we have this also kind of weird looking supply order block, which I'm hoping that maybe we can get a reversal into one of these. Maybe we get back here or gold gets back here one time and then we go from a long from here. I mean, I know that gold can just continuously go long. We've seen it where for 2 weeks straight it's just going in one direction. And the same pattern is happening again. So maybe it might just be a thing where we just need to find an entry and get in. But I feel like my entries were literally over here. And, if I had held on to them, I had just not a lot, just like 0.7 loss. So talking about 350 maybe instead of the 112 I made. So I could have made an extra 200 basically. But we'll find another way to get in. There's lots of pairs to trade, even though I'm not trading everything. But for now with gold, we're just gonna have to wait and see. Now we do have the CPI news on Wednesday, which we'll look at in the news in a moment. Hopefully that might help us, right? But for now, gold is just really on an upward swing, really strongly, and it's just not stopping. So we'll have to wait and see. I couldn't really tell you a re-entry right now until I see what gold does. And the thing about gold is that when it moves, it really moves. So it might be too late by the time you're saying it, but we'll see anyway. All right, with pound USD here, as you can see, the short is playing out perfectly. Um, with pound USD, it did a really nice weekly move where it took the weekly low and came to this. Now, depending on what school of teaching, in my early days, so this is 2016, 17, this is called a validation point. But I know that those of you who listen to ICT in a circle, you guys would call this a fair value gap. And then that would be the point where you reach your fair value gap level. So either way, just judging by the structure, it took 2 weeks for the price to do these, let's just call it 3,900 pips. And it's taken 5 weeks for the price to come back about 80% of the way. So it's very clear that the bullish side of the market is a lot stronger. Candlestick wise, you can see we have a supply order block here that the price broke above, returned to the other side of, gave us this nice induction right here, and then continued with this bullish action. So I'm of the belief that the pound versus the US dollar was going to give us a very strong bullish action. Now, in line with what we just looked at with the dollar index, where I'm saying that the price has given us that short structure, that short reversal. For me, I think that the price has potential to go long. I'm eyeing up this high right here. There is potential that, after the price kind of pulls back, which is why I'm in that last short, it's going to give us a really nice long that could take us above the high of the previous year. I've always watched this area here where we have this supply area. Let me just take this off and let's go here. Right here. So, I mean, right over here is a liquidity gap that hasn't been filled since 2022. And it's always a thing of why not, right? So the price going down vehemently short like this, I'm still kind of the decision now. Let me show you what I'm talking about. On the H4, I guess the only hard part is that we have a very strongly engineered sell or bearish trend line, all right? And even though the price is technically broken out, I'm not a trend line trader, but I'm trying to think how the market algorithm thinks. When people who trade trend lines see this break outside of the area, so let's make it as accurate as we can. So right now the price is kind of broken out of this area. Everyone's thinking that it's time to buy. So that would be the time to sell, right? Now, on the other side of the story here, on the H1, the price has done a really nice movement here, broken market structure really nicely. So I'm actually just waiting for the price to come back here. I have a pending order for 0.05 lots. I might slap some more on, but I don't mind starting small. If it hits my take profits and then starts to go long, then this long could be the one that goes all the way to those highs. Okay, structurally speaking, the price is in a good place. And I don't necessarily think, analyzing this, that the price has to take the low of the previous months here, even though we have two lows close together in order for us to get a move. If you go to the D1 here and look at just this demand order block here, so let's grab this and change the color to offer something easy on the eyes. Okay, that's not easy on the eyes, is it? So let's try something else. Okay, that's a bit better. You can see that this movement falls right in place. It's just that, of course, there's a lot of supply order blocks here, but the way we are going to know for sure that we're in the green is that if the price comes back down to that area, or even better, decides that it might even just take the low of last week, which would be a good trigger. So even though I've got this pending order here, I've got my eyes on it. If I get to the charts in that it's getting to the take profit, I might just take the trade and see what happens, and then watch to see how strong the price is moving, and maybe come out and get back in. So as you can see here, for example, I waited for pound USD for a while. I knew the price was going to go into this order block, which is why my stop loss is just resting here. And yeah, I want to see what the price is going to do with this movement. But pound USD is kind of my favorite trade for the day. All right, USD JPY. you understand what happened with the carry trade. I'm sure you've seen many different articles about it. But USD JPY dropped because the interest rate was increased, which means that people were carrying out what's called a carry trade, and those carry trades, of course, caused the market to tank last week Monday. But nonetheless, though, even though it seems as though the market moves randomly, it never does. All right, I'll show you why I'm saying that. So if you're trading in a circle style trading here, we have a fair value gap on the weekly time frame. The price crashed all the way down, entered into this order block that hadn't had any return to it. So it filled an unfulfilled efficiency and essentially filled out this fair value gap movement here too, even though it wasn't with the body of the candle, but with the wick. So there's nothing that's an accident in the market. You've heard me say this rhetoric for a while. It's beyond the conspiracy theory. I think it's actually just a very good fact, and I think it's a well-known fact now. Now, for me, when the price bounced here, we had a good set of movements going on. The market has just taken the high of the previous week. We'll have to see how strong the reversal is to consider whether the price wants to go short further, because if the dollar index is actually going to go short, then USD JPY should also be going short. The reaction is pretty media, as we would say right now. Nothing's really going on. So I couldn't say to you what to do. For now, I'm just going to be watching USD JPY. Okay, that's all I'll say for now. All right, Euro USD, not really that much of a fan of it. I have some markings here because it has taken out many significant highs. So it's taken a high of this month of March and also taken a significant high, not the all-time high of Euro USD's January month, but has taken a significant high. It's just that the reaction after is very weak. So it's leading me to believe that we're still going to go long on Euro USD. The body of the candle here is closed above the high of the previous month. So I'm of the opinion that price is probably going to continue going long. Okay. Now, USD JPY and Euro USD and also USD CHF usually have a very good correlation between each other. So if Euro USD is going long, USD CHF and USD JPY are going short. But the correlation is not completely like that right now. So we're going to have to kind of figure out what's going on here anyway. So saying that, what I would say is, let me put this on. So saying that, let me just put this here. Yeah. The USD CHF has done another long. Okay, it's done a weekly move like this, dropped into this area and it's pushing on. On a monthly time frame, as we've always discussed about USD JPY and USD CHF, there are some major moves on both of those pairs that need to happen. On USD CHF specifically, though, the price has been in a range, as you've heard me say before, from 2011 until now. It's really just been ranging between these two areas here, between 83 and 104, $1.04. Now, this range here, the reason why the price hasn't really gone heavily short, and if you go back to look at the charts from 1980s, 70s, and 60s, you see that USD CHF is just in a consistent downward short. My thing is, though, there are equal highs on this year's highs, 2022. And for me, I know that in order for the price to continue going short, because I do think the dollar is going to take a big dive at one point, we need price to push long into this 108 area. We need a very strong bullish action. Now, in order for us to have a kind of strong bullish action like that, it would have to be some sort of major market event that could start turning the dollar to become bullish. Like, for example, a new president coming into the White House. So I'm suspecting that in November, maybe Donald Trump wins, or to be fair, Kamala Harris wins. We don't know right now. If any of the presidents win, they may use that as a way to pump the dollar. I don't know what president will do or what effect it will have, but I definitely know it will have some sort of effect. So I'm watching USD CHF pretty closely. I'm going to leave this here. This is let me just put that as well. Let me see if I can make some more space, if there is some. Yeah. So the demand order block, which is holding the price right now, is here. Now, you've probably seen there's a long spike on your chart from 2015. That's the massive crash that happened when the euro and the Swiss franc depegged from each other. They used to have a 1 Swiss franc to 1.2 euros, and it was locked in a fixed forex chart structure. The reason being is because Europe and Switzerland had trade with each other, so it was lucrative to give that 20% discount to the Swiss people for importing and or for exporting basically, and imports as well. Now, when they decided to depeg, which was January the 15th, I've talked about this before, and it's in my full course on my website. Essentially, that depegging caused the market to crash massively. That was January 15th, 2015. So this spike, even though I consider it, if you ignore the spike and just focus on the demand order block, you can see the prices dropped right back into this order block here. So I'm not suspicious, but I'm seeing that there's probably going to be a very big movement soon. Now, the price, of course, could take off without doing this, but I would like to see if the market will be brave enough to just go for the low of the previous month. So my hypothesis here, long story short, is that if USD CHF goes short, which means the dollar index actually does the short we're looking for, and it's strong enough liquidity to make USD CHF go to take the low, if there's a sufficient market structure break on the lower time frames, I say we go for a long, just hold on to it for a little while. Even through the news that comes out from the election time, all the way up to here. For the next year or two, I think that the market can achieve this. Once it gets here, that's when the days when the dollar's going to start dying for sure. And I'm sure things will line up because they always do. So that's really my view on USD CHF. Right? In the short term, though, on the H4D1, couldn't really tell you much because the price is clearly closed above the previous week's high with a few H4 candle bodies now. So probably is going to continue long. We'll just have to wait and see what the market's got to offer. I guess the next thing you can do would be to reach for the next weekly high, which is quite far away. So if it is going to go long, that means that we might have a temporal, strength from the dollar or some temporal weakness from the Swiss franc. We'll see. So yeah, with these trades right here, as you can see, my pound USD chart, just doing a quick check on it. I'm just hanging in there to see what it does. The last pair I probably wanted to go through, apart from USD CAD. Yeah, let me do USD CAD first. So USD CAD, let's go to the weekly. USD CAD has taken the high of the previous year, which is a very significant movement. Now, opposed to Euro USD, which when it took significant highs, didn't really react much. You can see in that same week, we had a strong bearish movement. You can see from the time frame of the weekly alone that there's a market structure break at this swing low here. So if the price is going to give us a return back and then give us a short, that would be a great movement for us to, ride this wave short. Now, the USD CAD is called the loonie because it's actually a pair that doesn't always follow the normal US dollar correlation. It has stronger correlations between it and oil. So if you're an oil trader, when USD CAD is going long, oil is usually going short. And that's because the Canadian dollar is one of the major, or the Canadians are one of the major exporters of oil in the world. So any appreciation in oil would make their currency stronger. But this low right here, where the price is just accumulating, we might be able to get something here. Now, there's another low not too far away from that. So I want to be watching the Canadian dollar. If it takes these two lows, then I would be looking to go for a long until around about this region here, and then aim for a short. If it doesn't work out, it doesn't work out. But this is a very strong induction. This is a level 3 induction, as I call it, because on a H4 time frame, you have a wick that is 65 pips long, which is some people's, trade for the day. So it's a very strong reaction. So I'm watching USD CAD. I'm just not reacting to it yet. The good thing I also say about it is that the daily low is very far away and there's a gap here too. So it's a good telltale sign. I think with USD CAD, I'm going to be doing more work with it. I just want to see what happens more around the CPI time. Okay. My last pair is US 2000. Now, if you're on IC Markets, which I recommend you get an IC Markets account, and if you don't have one, I'll leave my link in the description below. Please follow our link. It does help us to continue giving you new content. All right. And it doesn't cost you anything to be a referral because we can earn lots and you can also have a good account manager that you're working with rather than a terrible one. So saying this, if I go over to the daily time frame, the US 2000 has taken several lows It's taken the low of the previous month and the low before that inside of a demand order block. And as you can see here, the price on the H4 took this high and gave us a strong short. I do believe we're going to get a very strong US 2000 long, which probably means we have a US 30 and 500 long. My thing is, though, as I was explaining to the students, that these equal lows right here, I'm wondering if the market would want to take those out before going for a long. But again, the other side of the story is that my threshold is that if I see a H4 candle close above this order block and then a return here, and then, a push for this long right here, there's only one thing I'm doing, which is I'm pushing long. So I'm going to go for a long at least to here. Maybe the market might break above here, but I'm going to close out here, see how it behaves. If it's not being resisted from going any further long, I'm going to go in again and just continue riding the wave. Because this could be one massive move that takes the US 2000 to new highs. Now, structurally speaking, on the monthly, the price also took this significant low here back in 2020 or 2020's low from the looks of things here. Let's just verify that. Okay, 2022's low, excuse me, not 2020. In 2023. And since then, it's given us a very strong long. So the general movement for most of these pairs, US 2000, US 500, will be an upwards scale, but for, obvious reasons. One of the reasons why I like to use the robot on there. But essentially, when I'm looking at the charts right now for US 2000, the market is just open, the US open in the last hour and closed beneath here purposely. So we have a body closed beneath the low. So this is showing intentions that the price does want to come back here. So that being said, I'm actually being watchful to see what we have going on. I also see equal lows over here. So I'm going to be suspicious, but I am not every equal low. I mean, it's very hard to see. It's probably like a pip apart, but I'm still watching carefully to see what the market's got to offer. If it comes back down here, maybe slips beneath the low, I am going to take a long and take the chance on it. Because I do think that there is a chance that this is going to be a fantastic movement. In fact, I'm going to leave an alarm around about here, probably two of them, just in case, so I don't miss this move, because I want to take a long. Now, why the US 2000? Well, if you don't have enough money in your account to trade the US 30, I always want to provide good solutions. If you trade on IC markets, the US 2000, let me just open up the risk management tool. For you to trade one lot, which is the minimum, it only costs you £8. Okay. Apart from that, if you want to trade the US 500, I'll show you how it looks. It's the US 500. If I put the same tool on, it costs £20. I do know that, but yeah, it costs £20 here, so it'll be about $30. And you can see here that if you're a good trader and you know what you're doing, you can still make good money just from trading this. For the US 30, you're going to need $154, even though, of course, the pit value would be higher, so you'll make more money. This small move here is £700. Or you do need to have a bit of money in your account to be able to achieve something like that. But nonetheless, a movement like this in your favor, if you have the account, of course, with enough money, you'd made $750 for the day, which is great money. But I think if you want to start out from somewhere, US 2000 is the place to start. Okay, so these are my kind of conversations with you guys. Gold looks like it's pulling back now, which is great. Let's hope that it does give us a full pull back here. My pound USD trades are also following the same suit, which is great. But again, I still think that there's going to be a long, so I'm not going to hold it forever. I'm just going to hold on to it here. I might even reduce my risk on the other side and just see how it follows through. Okay, so I'll catch you guys later on. In fact, before I catch you guys later on, let's go and check the news because I don't want to forget that. All right, so back on our screen here, if I go over to the economic calendar, now I always use FX3. I find it very useful, nice and easy to use. What I've done though, mine may look a bit different from yours. I've used the filter here, and all I'm doing is I've filtered out none and low impact news. So it's either medium or high, that's it. Now you can also change categories as well by different things, but I'm just not going to waste time to unclick all of the different countries and stuff because it's not really important right now. All right, so let me just apply a filter so that I can get out of here. But here we go. So if you want to take it one step further, it's just I do keep mediums because sometimes mediums do have an effect on the price, so I want to be aware of them at least. But if you want to make it even more focused, which for this lesson, I think in this session, I think it's good to be even more focused. I'll take off medium and only look at high. So the ones that are high here, tomorrow we have 6 o'clock, we have UK high impact news. So that affects anyone that's in pound USD, including myself. Then we have producer or the PPI index for which is still an important figure for the US. So we could still see the market moving quite strongly at 12:30. Now this is not set properly, so I'm gonna set this automatically because right now it's actually 325, not 225 in the UK. So with that being said, let me put my filter back. Because it's gonna refresh the page, manage all, for my choices, go back to the site, and then now I can go back here. So none, low, medium, untick those, apply that. Here we go. So it's at 7 o'clock, not 6. So 7 o'clock UK time, 1:30 US or UK time. We have the Wednesday news here. Now let's see the whole week. All right. So Wednesday we have the interest rate decision. Now I like to take advantage of the New Zealand dollar pairs and Australian dollar pairs when I do. Maybe like having some scalps, like some sell stop, buy stop kind of movements. It works sometimes, not all the time. But if anything, if there is any good setups of the New Zealand dollar, maybe tomorrow, probably won't look at it today. Try to get in and hold it through the news because there might be some good upwards gain that we can get whilst, the market's moving. So here's the important news of the week, the most important news of the week, which is the CPI news. Now, CPI, because of inflation and everything in our economy, in our world today, CPI is very sensitive as a subject in the economy right now. Any changes to it, especially the US CPI, because it's the dollar is the world reserve currency of the world. Seriously, it could be very crazy that day, and I've seen the CPI do crazy things to gold. So it's really just a matter of what happens that day. On Thursday, we do have a bit of high impact news again from the pound. So I'll be watching that. And on Friday, we have the Michigan consumer sentiment, which, as I've told you, if it gets higher, then that's good for the dollar. If it gets lower, it's bad for the dollar. When it gets below 50, it's really bad for the dollars. That's really all you need to remember about it. All right. All it is just a sentiment to see if people are looking to spend more or to save more. If it's below 50, people don't have trust in the economy. They're looking to save more than they're spending. And if the money velocity goes down, then it's bad for the economy. That's the long story short explanation for it. So Wednesday is the main day, it's the big day. But if you're trading pound USD or pound pairs, then, in the morning, UK time, 7 o'clock is also important. All right. But again, I hope you guys enjoyed. I promise I won't stay for too long, but I hope you guys have enjoyed the session. I'll be back every day, Monday to Thursday. Probably won't be doing Friday. Now, apart from this, I will be releasing courses on how to build algorithms here. I have some free courses I've built for you guys to get you started on how you can actually build algorithms with Python and with MQ04. So stay tuned for that. All right. Take care, guys. Have a great day.